I'm reading about savings and loan holding companies right now out of the Reference Guide to Regulatory Compliance, the electronic new version, starting on PDF page 826, paper page 807. The Homeowners Loan Act of 1933 authorized the establishment of savings and loan associations for the purpose of lending to consumers for homes. The Federal Home Loan Bank Board was given the authority to regulate and oversee savings and loan associations and savings and loan holding companies. During the 1970s and 1980s, interest rates rose and many savings and loan associations were prohibited from making variable rate loans. In the early 1980s, many deposits left the federally regulated financial institutions, including savings and loans for unregulated entities that were paying higher rates. The FHLBB was abolished in 1989 as a result of this crisis, and the board's authority was transferred to the then newly created Office of Thrift Supervision, which was placed under the jurisdiction of the Department of the Treasury. Savings associations have evolved since their inception, and their powers and authorities have migrated to many of the authorities of national banks. Notwithstanding that evolution, there are investment limitations and statutory requirements for a concentration in mortgage-related assets qualified thrift lender test. Powers of savings and loan holding companies expanded over the next 20 years. These institutions now have virtually identical powers to commercial banking institutions. In 2011, pursuant to the Dodd-Frank Wall Street Reform and Consumer Protection Act, the OTS was eliminated and supervision of the underlying federal savings associations was transferred to the OCC. The supervision and regulation of savings and loan holding companies was transferred to the Fed. In 2011, the Federal Reserve Board issued Regulation LL as an interim final to implement the transfer. Coverage. Subpart 1. Companies that own at least one savings and loan association, except for a bank, holding company, or a company that holds the savings and loan as a fiduciary. Subpart 2. Requirements. Record keeping and reporting. 1. Maintain accurate and complete records of all business transactions that are in compliance with GAAP requirements. 2. Maintain all records as required by the Federal Reserve. 3. All records must be readily available for review by the Fed within 5 days of a request. 4. Submit all reports required by the Federal Reserve. Filing requirement. Within 90 days of becoming a savings and loan holding company, the company must file a registration statement with the FRB. Savings and loan holding companies must file an annual report with the FRB within 90 days after the end of each calendar quarter. Quarterly reports must be filed with the FRB within 45 days after the end of each calendar quarter. Number 6, audits. The Fed may require any savings and loan holding company to have an independent audit of the institution's financial statement. B. Independent audits are required for institutions that have consolidated assets of $500,000 or more. B. Safe and sound operations. A savings and loan holding company may not conduct its operations in an unsafe or unsound manner. The Federal Reserve may require a holding company to terminate any activity it believes is either unsafe or unsound. C. Tying restrictions. A holding company or a savings and loan association or any affiliate of these may vary the consideration for any product or package of products based on a customer's maintaining a combined minimum balance in certain products, eligible products, specified by the company if the savings association or affiliate offers deposits and all are eligible products, and B. Balances in deposits count as least as much as non-deposit products toward the minimum balance. This exception will be terminated if there is a finding that the arrangement is resulting in anti-competitive practices. D. Capital. Savings and loan holding companies will be held to a formal capital requirement under Fed rulemaking. Previously, the OTS required capital at a holding company, but under flexible standards. With the passage of Dodd-Frank Act, savings and loan holding companies will be subject to fixed capital requirements and formal source of strength requirements. In addition, any trust preferred securities issued and held as capital will be required to be phased out. The timing of that phase out is subject to rulemaking. Subpart 3, Prohibited Activities. A. May not engage in activity for the purpose of evading any law applicable to savings and loan associations or holding companies. B. May not engage in unrelated business activities unless they are grandfathered unitary savings and loan holding company. Companies that are already involved in unrelated activities at the time of their approval as a savings and loan holding company must cease such activities within 2 years of becoming a holding company. The following activities are exempt from this restriction. 1. Providing management services for its own holding savings association subsidiary. 2. Conducting an insurance agency. 3. Conducting an escrow business. 4. Holding, managing, or liquidating assets from one of its subsidiaries. 5. Holding or managing properties used or occupied by one of its subsidiaries. 6. Acting as trustee under deed of trust. 7. Any other activity that is permissible for a bank holding company. And 8. Purchasing, holding, or disposing of stock acquired in connection with a qualified stock issuance if the FRB has approved in advance. C. Under prohibited activities, foreign holding companies that controlled a single S&L as of August 10th of 1987 are not subject to prohibited activities section for holding company activities that take place outside the U.S. And D. Holding companies with common ownership, 25% owned by one person, will be subject to limitations to the same extent as they apply to multiple holding companies. Subpart 4, Exemptions and Grandfathered Activities. The following are exempt from limitations on engaging in unrelated business activities. 1. Savings and loan holding companies and their subsidiaries that control only one savings association, provided that the savings association is a qualified thrift lender. For example, it has a statutorily required thrift investments. Any savings and loan holding company or subsidiary thereof that controls more than one savings association, if all of them are qualified thrift lenders, and all, or all but one, of the savings association subsidiaries are acquired pursuant to an acquisition under the Federal Deposit Insurance Act or National Housing Act. Number 3, a savings and loan holding company whose subsidiary fails to qualify as a qualified thrift lender may not start or continue any activity other than those specifically permitted by this regulation, except that the Fed may allow, for good cause shown, such holding company up to 3 years to comply with the limitations of those activities. However, if the company or savings, maybe subsidiary, or its subsidiary ceases to be a qualified thrift lender within 1 year, it must register as and be deemed to be a bank holding company subject to the Bank Holding Company Act. B. Any savings and loan holding company that received approval to acquire a savings association prior to March 5th of 1987 may engage in activity that was lawful on March 5th of 1987, provided that the holding company does not acquire any additional savings and loan associations except from the FDIC. 2. Any savings association subsidiary qualifies as a domestic banking, building, and loan under the IRS code. 3. The holding company engages only in permissible activity. 4. Any savings and loan subsidiary does not increase the number of locations after March 5th of 1987, other than as acquired from the FDIC. And 5th, any savings association subsidiary does not incur an overdraft, including an intraday overdraft, in its account at the Federal Reserve Bank. C, the Federal Reserve Bank may terminate any grandfathered activity after an opportunity for a hearing in order to prevent a conflict of interest, to prevent an unsafe or unsound practice, or to protect the public interest. Subsection 5, permissible activities. A savings and loan holding company may engage in the following activities. A, originate, purchase, sell, or service any of the following. Any participation secured by real estate, including brokerage and warehousing of real estate loans, except for loans secured by real estate in which a subsidiary savings association is an interest. 2, manufacturing home chattel paper, including brokerage and warehousing of such chattel paper. Loans with which loans with or without security for the alteration, repair, improvement, or furnishing of any residential real estate. 4, educational loans. 5, consumer loans as defined, provided that no subsidiary savings association may engage in any transactions with an affiliate involving the purchase or sale of consumer loans. 6, there is no 6. We're in Subpart B under permissible activities, or letter B under permissible activities, is furnish or perform clerical accounting and internal audit services primarily for its affiliates. C, furnish or perform the following services primarily for its affiliates and for any savings association or other multiple holding companies and affiliates thereof. 1, data processing. 2, credit information, appraisals, constructions, loan inspections, and abstracting. 3, development and administration of personnel benefit programs, including life insurance, health insurance, and pension or retirement plans. 4, research, studies, and surveys. 5, purchase of office supplies, furniture, and equipment. 6, development and operation of storage facilities for microfilm or other duplicative records. And 7, advertising and other services to procure and retain both savings accounts and associations. Letter D, under permissible activities, is acquire unimproved real estate lots and other unimproved real estate for the purpose of prompt development and subdivision, for construction of improvements, resale to others for such construction, or use as mobile home sites, and develop subdivisions and construct improvements on such real estate, and develop subdivisions and construct improvements on such real estate. That's interesting. E, acquire improved real estate and and mobile homes to be held for rental. That's interesting too. A holding company can do this, but a savings and loan itself can't actually do this. F, acquire improved real estate for remodeling, rehabilitation, modernization, renovation, or demolition and rebuilding for sale or for rental. G, maintenance and management of improved real estate. H, underwriting or reinsuring credit life or credit health and accident insurance in connection with extensions of credit by the holding company or any of its subsidiaries. Letter I, prepare state and federal tax returns for account holders or borrowers from unaffiliated savings associations. J, purchase and sale of gold coins minted and issued by the U.S. Treasury. K, any services or activities approved by former Federal Savings and Loan Insurance Corp. Prior to March 5th of 1987. Subpart 6, procedures for commencing activities. A, before a savings and loan holding company, subject to restrictions on its activities, may begin to engage in a service allowed by this regulation, it must file a notice of intent with the appropriate Reserve Bank in the form prescribed by the FRBB. The FRB will act on all applications within 60 days of the receipt of a completed application. I think that's supposed to say FRB and not FRBB. Anyway, Subpart 7, permissible bank holding company savings, activities of savings and loan holding companies. Activities permissible for bank holding companies pursuant to Federal Reserve Board regulations are permissible for savings and loan holding companies and subsidiaries. B. No savings and loan holding company can commence any activity permitted for bank holding companies without the prior approval of the Fed, unless 1. The holding company received a rating of satisfactory or above prior to January 1, 2008, or a composite rating of 1 or 2 thereafter in its most recent examination, and is not in a troubled condition, and it does not propose to commence the activity by an acquisition of a going concern, or the activity is permissible under the Homeowners Loan Act without prior notice or approval. C. Application to begin any bank holding company activity must be filed with the FRB. And D. In evaluating an application filed to commence an activity allowed by a bank holding company, the FRB will consider 1. Whether the activity can be expected to produce benefits to the public that outweigh possible adverse effects, and 2. Whether the financial and managerial resources of the applicant, including its subsidiaries, and of any company to be acquired, are sufficient. Subpart 8, acquisitions. Transactions requiring FRB approval. 1. Formation of a savings and loan holding company. 2. Acquisitions of more than 5% of a non-subsidiary savings association or savings and loan holding company. 3. Acquisition of substantially all the assets of a savings and loan association or a savings and loan company. And 4. Acquisition of a savings and loan or savings and loan holding company by an individual who owns, controls, or holds the power to vote more than 25% of the voting shares of a savings and loan association or holding company. Letter B, under acquisitions, is the filing requirements. Transactions subject to FRB approval require an application must be filed with the appropriate reserve bank on the form designated for that purpose. 2. Publish a notice of the application in a newspaper of general circulation, providing an opportunity for interested persons to comment on the proposed for 30 days. 3. Newspaper notices must be published no more than 15 days before and no later than 7 days following the date the application is filed. 4. The FRB will publish a notice in the Federal Register. 5. Public comments will be accepted, and the FRB may, in its discretion, extend the comment period. 6. The FRB may order a hearing. 7. The Reserve Bank must approve an application no earlier than the 3rd business day following the close of the public comment period, and no later than the 5th business day following the close of the public comment period, or the 30th day following acceptance of the application, whichever is later. 8. An action will be deemed to be approved if the FRB fails to approve by the 91st day after the application is submitted. Letter C, exceptions to the requirement to obtain FRB approval of the acquisition. 1. Shares held as a bona fide fiduciary. 2. Share held temporarily pursuant to an underwriting agreement in the ordinary course of business. 3. Shares held in an account solely for trading purposes or over which no control is held other than voting rights acquired in the normal course of a proxy solicitation. 4. Shares acquired in securing or collecting a debt previously contracted in good faith for 2 years after acquired. These are 5 and 6 is going to complete the exceptions to the requirement to obtain FRB approval of an acquisition section. So, shares held by any insurance company, provided that all shares held by the insurance company's affiliates or the savings association or holding company may not exceed 5% of all outstanding shares. And 6. Shares acquired pursuant to a qualified stock issuance under Regulation LL, Subpart E, may not exceed 15% of the shares outstanding. Transactions not requiring FRB approval. Control of a savings association acquired under the terms of a will creating a trust. That does not require FRB approval. 2. Control of a savings association acquired in connection with a reorganization involving only the acquisition of control of the association by a newly formed company controlled by the same acquirers that have control of the savings association for the immediately preceding 3 years. This transaction does not require Fed approval only if there is no other transaction and the acquirers have filed a designated form with the appropriate Reserve Bank and provided all information requested by the FRB or the Reserve Bank. 3. Control of a savings association acquired by a bank holding company that is registered under and subject to the Bank Holding Company Act or by any company controlled by such holding company. 4. Control of a savings association acquired solely as a result of a pledge of stock to secure a loan contracted for in good faith and in the ordinary course of business. The acquisition must be reported to the FRB within 30 days, and the acquirer may not retain the control for more than 1 year from the date on which the control was acquired. The FRB may extend the 1 year period from year to year if the FRB finds that such extension is warranted and not detrimental to public interest. 5. Control of a savings association acquired through a percentage increase in stock ownership following a pro-rate stock split or dividend. Six, acquisitions of up to 25% of a class of stock by a tax-qualified employee stock benefit plan. 7. Acquisitions of up to 15% of the voting stock of any savings association by a savings and loan holding company if such acquisition is pursuant to a qualified stock issuance. 8. Internal corporate reorganizations or acquisitions involving mergers do not require advance approval, including the acquisition of a savings and loan association or the merger of a company controlling a savings association with a savings and loan holding company if the transaction is part of the merger of the savings association with a subsidiary savings association of the acquiring savings and loan holding company, or is part of the purchase of substantially all of the assets of the savings association by a subsidiary of the acquiring savings and loan holding company, and Roman numeral 1, the savings association is not operated by the acquiring savings and loan holding company as a separate entity other than as a survivor of the merger or asset purchase. Roman numeral 2, the merger or asset acquisition occurs simultaneously with the acquisition of the shares of the savings association or holding company. Roman numeral 3, the merger receives applicable regulatory approval. 4. The transaction does not involve a mutual depository institution. 5. The transaction will not have an adverse effect on the financial condition of the acquiring company. 6. The acquiring institution provides advance notice of at least 10 days to the appropriate Reserve Bank. 7. The acquiring company has not received a notice from the FRB that prior approval is required. Other transactions B, such as, let me just read A one more time. What did A stand for again? Ew. Basically, this is an internal corporate reorganization or acquisitions, including mergers, do not require advance approval, including A 1 through 7. B. Other internal transactions, such as mergers of holding companies that are each a subsidiary of a savings and loan holding company. B. Formations of subsidiary holding companies. Roman numeral 3. Transfer of control or ownership of subsidiary savings associations or holding companies between subsidiaries or a subsidiary and the holding company. Roman numeral 4, corporate reorganizations, where prior to and after the transaction, the companies will be lawfully controlled and operated by the savings and loan holding company. Roman numeral 5, the transaction does not involve the acquisition of additional voting shares of an insured depository institution. And Roman numeral 6, The transaction does not involve a savings and loan holding company that is organized as a mutual. So at the top of paper page 814 right here, I'm looking at Subpart 9, Prohibitions. Control of Mutual Savings Association, letter A. No savings and loan holding company or any subsidiary, director, officer, or employee thereof. Oh man, I missed that whole thing. Cat was acting crazy. I'm actually going to stop before prohibited activities because it's going to take too long.